Hello, I'm Jerry Willis, and this is Open House, the show that saves you money. Coming up, Financial Security Watch. We'll show you how to recession-proof your savings. Everything you need to know now about protecting your money. Then your questions and real answers. We're putting what's on your mind on our show. But first, the big questions on everybody's mind. Are we headed toward recession? Will an economic stimulus plan make all the difference? And what does this mean to your family? Peter Schiff is the author of Crash Proof, How to Profit from the Coming Economic Collapse. He's joining us from Stamford, Connecticut. Greg McBride is coming back to us. He's a senior analyst with Bankrate.com, joining us from West Palm Beach in Florida. Knight Kiplinger is editor-in-chief of Kiplinger's Personal Finance and joins us from Washington. Welcome to all of my panelists. Good to see you guys.
Thank you.
Hi, Jerry.
Let's start with the biggest headline this week. The president and Congress seem to be coming to terms with a stimulus plan. Could mean as much as $300 to $1,200 for American families. I have to start with you, Knight. Is this going to be meaningful? Will this drag the economy back from recession?
Not by itself. I don't think it's a big deal economically. Some people will spend the money, some people will save it. It's not enough by itself. I think the effect is more psychological, just as I think the Fed's rate cut a couple of days ago had a short-term psychological effect. I think the U.S. economy is going to avoid a recession because of the underappreciated sectors of this economy that are doing very well. We know what's hurting, but we don't appreciate who's doing really well.
Greg, I got to get to you for a second because of what Knight mentioned about this not being enough. What if the Fed continues cutting rates? We got 75 basis point rate cut this week. Is that going to be enough? Do we need more?
I think we need more and we'll get more. As Knight said, the stimulus package isn't going to be enough by itself, but neither would the Fed interest rate cuts. Combined, that could make a big difference. I do expect that the Fed will cut interest rates again this coming week because it's a long haul until their next meeting in March. They don't have the luxury of sitting back and waiting.
Peter, is this the right medicine?
Not at all. First of all, we're already in a recession. It's going to get a lot worse. But the last thing we want to do is stimulate more spending. The way we got into this mess was that Americans spent money they didn't have. Now we're loaded up with debt and we can barely repay it. We need to start saving. All the stimulus package is going to do is lead to more inflation, ultimately higher long-term interest rates, and that's the last thing American consumers want is higher inflation to compound these problems.
In fact, you make the point in your book that we could be headed for a big depression. Knight, what do you think of that?
Well, if Peter means by that a depression like the 1930s in which GDP fell by 50% and employment hit 25%, one out of every 4 working Americans in the 1930s, no, we're not headed for a Great Depression. As a matter of fact, I think we're going to skate right on the edge of zero growth through most of this year. Anemic growth, it's not going to feel very good, but I think we're going to avoid a clinical recession of contracting output for 2 or more quarters.
The economy is already contracting if you measure it in anything other than U.S. dollars, which are shrinking themselves. If you measure our economy in euros, in Canadian dollars, in gold bullion, it's been in a massive decline, and that's going to continue. The government is debasing our money, and it's screwing up all the measures of valuation. We measure stocks, we measure real estate prices in a currency that is in perpetual decline, so it creates the illusion of growth.
Even so, let's take a look at how stocks typically perform pre, during, and post-recession. There's actually a good news story coming here. The stock market anticipates what's going on with the economy, and we could be in a situation, we saw some of it this week, where stocks go up. Greg, what do you think about the prospects for investing in the stock market?
I think the prospects are very good, provided that you have a long-term horizon. You're getting much better value out of the market now than you did just a few weeks ago. And I think that that's why you saw such a big turnaround in the middle of this last week, where you had a big intraday swing. A lot of investors recognizing that value and stepping in. Once the economy regains its footing, I think the market will do quite well, particularly with large cap stocks. The valuations are not scary. They are very attractive, and with the latest downswing, it just makes it all the more attractive.
Peter, can I get you to something that I know you think is very scary, and that's a housing market. Where are housing prices going?
Well, you know, they're going to go a lot lower. Remember, what happened in the housing bubble is you had this, you know, low interest rates fed the housing bubble, and Americans were operating under the delusion that their home equity represented legitimate wealth, and they went and borrowed trillions of dollars against that home equity, and they used all kinds of gimmicks to be able to afford the loans, teaser rates, negative AM, option arms, and now that these rates are resetting and the home equity is vanishing, they realize that, you know, that equity is gone and all they have is debt, and we're going to have a major recession. Home prices are going substantially lower, and if you're talking about stocks, we've been in a major bear market since 2000. The Dow is down by over 70% since its 2000 peak, priced in gold. This is a major bear market. Stocks are going a lot lower. The dollar is going lower. People need to invest abroad. They need to get their money out of U.S. dollars, out of U.S. bonds.
It's always good to diversify, right, Knight? I mean, diversification is a beautiful thing.
You know, I share Peter's enthusiasm for the global economy. I'm a serious global investor myself. And like Peter, I expressed warnings over the last 2 years about inflated residential home prices. I expressed warnings about Dow 14,000 last fall. I mentioned earlier the unappreciated strengths of the U.S. economy. If the U.S. economy were entirely home building and autos and a few money center banks, we'd be in a severe recession already, which we are not.
Right.
Let's look at the strengths of this economy. Export manufacturing, earth-moving equipment, aviation, medical diagnostic equipment, chemicals, software. The United States is on an export tear, selling to strong economies all over the world.
Yeah, but we have a record trade deficit. How are we on an export tear when we still have $65 billion a month trade deficits?
Because of petroleum, because of the price of petroleum.
Look at export.
Guys, we're going to have to leave it there. I'm so sorry. It's such a great conversation. I'm sure we'll have you back. Great conversation, great points. Thanks so much.
Thank you.
Thank you.
Thank you.